Is it possible to have a rally or have a strong market without foreign funds, foreign inflows?
Well, with zero, I think it would be hard. But I think if you look at the post-global financial crisis period, sort of 2009, 2010, foreign activity fell to maybe 30% of daily turnover. And in any market, I think there's a book called The Lexus and the Olive Tree by, who's that economist again? I forgot, the guy with the crazy hair. Who said that in any market, the first bull has to be a local. You cannot expect a market to run when the locals are not running ahead of the game. And that's what you need to see, that the locals have confidence, because if the locals have confidence, the foreigners will come back. And we've seen that many, many times before. So the question is, where are we with that today? What are the locals doing today? And I think you'll see some data out there. I think there's a few companies, more than just a few, doing buybacks already. And that's a sign of some confidence from the locals. No? Locals doesn't necessarily mean retail. No? It means it could mean the corporates that are doing buybacks.
Buybacks meaning that the owners of the companies think that their stock is cheap enough for them
to buy themselves back, because it adds value to the shareholders ultimately. No? And so once you see evidence of that, the bulls or the market turning a bit bullish on the back of local buying, then the foreigners will follow. The foreigners will never start the rally. They'll end it, but they might not. They'll never start it. And I think you need the foreign money, because it has a. I mean, if you look at inflows since 2008, there's a very high correlation of flows with the index, very, very high. And so it's not like you can do without it. But why would they buy if we're not buying? Why would they invest in the Philippines if we're not investing in the Philippines? So that's the bottom line, I think, in the end of the day, is that the first bull must be a local.
Another question, diba, we've seen the government figures and expectations go through some sort of a mania, because it appears that the government may not completely know what they're forecasting. I guess my question to you, Phil, is that over the next couple of weeks, months probably, are we expecting more surprise on the upside or on the downside?
I think surprises on the downside are more likely to come from external factors. Surprises on the upside have to come from internal factors, I think. So I think, from the outside, we have no control. We have no control over trade war issues. We have no control over what the Fed does. That if it escalates, it could cause more problems. It could send money running to the U.S. for cover for now. So I think the risk of external factors is high, and it's probably more downside risk than upside risk today. But locally, I think, as we pointed out earlier, I mean, all of these factors, we've given our view that within the next few months, we might see these things change towards the positive. And that, I've seen this market go up 15, 16% in 2 weeks in the past. I mean, we've seen it go up 30% in 1 quarter. I'm not saying it's what's going to happen now. But this market can move back very quickly when things turn right. And we need to see catalysts for that. We need to see that the locals are investing, the corps are doing buybacks, and at the same time, some signals that foreigners are buying as well. So I was mentioning that today we have $1.45 billion in outflows. What if I told you that by the end of the year we might have a net inflow number? That would be a positive sign, right? If San Miguel's deal happens, and if they do their IPO and raise the money they want to raise, 70% of the $2.5 billion they want to raise is going to come from foreign. That's $1.8 billion. In 1 week, we're going to turn around the foreign inflow number. In 1 week. right? Last year, the reason we had $1.1 billion in inflows was because of two deals, EDC and Meralco.
Right.
So, but that's a signal. That's a signal that the foreigners are back in the market, right? Take it how you want to take it, but if in the end of the day, the headline news says Philippine market got net foreign inflows this year, I think it's gonna be a positive thing for the market, right? So these are factors that you have to look at that change sentiment almost overnight.
We're talking about our current president being the president that we have right now. We mentioned that regardless of politics, diba, we've mentioned kahit sino yan, dahil our population is very young, kahit sino ilagay mo, lalaki yung bansa. So I guess that still holds true right now. Right?
I mean, I think it's absolutely true. I mean, you know, you know, from a stock market perspective, let's say, I started my career in 1989. We've had 6 presidents since then, and the index has gone up from 800 to 9,000, right? You can name any type of event that you want, from earthquakes to coup d'etats to change of leadership on EDSA to you name it. I mean, we've gone through it, and in the end, the market still went up 9 times in that period. As a matter of fact, even if you go as near as 2003, we were back to 1,000 after the Asian financial crisis. So, politics matter for sure, but earnings matter more. And if earnings continue to grow because of good policy, because of a stable economy, because you know, the managers of the financial system are on the ball and doing the right thing, then I think companies will continue to grow. And you know, I see no reason why we should be trading at 10 to 12 times multiple. I think a 15 times multiple is a fair multiple for the Philippines. 22, probably not sustainable, which is where our average has been over the last 5 years, and why the market has been so volatile since 2013.
Okay, so given that, Phil, is a full equity portfolio still ideal? Meaning, what portion in equities would you recommend the customers to have?
Well, I mean, right now, obviously, there's a bit of an assessment that needs to be made. Dino will point out later on the fixed income side, but today a 1-year T-bill will give you 5.3%. Okay, that's great. It's not the 10x type of returns equity investors want, but hey, at least you're in a parking lot that's paying you a nice return while you wait. You know? I'm still a firm believer that equities will eventually give you your returns. The question is really, and I think many experts have said this, is that when downturns like this happen, you need to have cash. You need to make sure that you're able to participate. Even if you're taking a loss, but you still have a position, go ahead and turn that position around to something that you think will recover quicker. Or keep that position if you think that's the one that's going to recover quicker. But doing nothing, hiding inside a hole like a rat scared of the light, that's how you lose money. So you need to act. And acting might be going out and placing some money first in a fixed income product or money market fund that gives you that safe return, but get ready to pounce because things can change very quickly. And I still believe equities is what will give you those excess returns over the long run.
Maybe if I can add it. And the question was, should I have a full equity
is it
portfolio?
ideal to have a full equity portfolio? And if not, what is the portion that you would recommend?
I think if you look at it, that's a question on risk profile and time horizon and objective. At the end of the day, it's individual to each investor. So it's really a question of your own situation. Typically speaking, equities are risky assets, and they can go up and they can go down. Right. How much you should have is really dependent on you as an investor. Now, as Phil mentioned, markets go up and down. And within your sort of broad allocation, you make adjustments as necessary. For example, now markets are very depressed.
Right.
This common, the wise men always say, when should you be buying or should you be investing? Is when things are down.
Right? Buy low, sell high.
Buy low, sell high.
People are so afraid that they're gonna dump their
but
stocks.
unfortunately, it's very counterintuitive, and it's against our nature. That's why there's a whole area of behavioral finance. So I think to answer your question, should people have a full equity portfolio? Well, it really depends on your own situation. When should you have more in equities, and when should you have less in equities or more in bonds? It really depends on the market situation. And we all know that you should be buying things when they're cheaper, not when they're more expensive. I think that's something to keep in mind,
Right.
Especially in these times where it's very disconcerting, the situation.